Hello, congratulations on your decision to start a business. In this session, we will take a look at the differences between running your business as a sole proprietorship versus an incorporated company. Your decision could have a very serious impact on your taxes and many other dealings with customers, suppliers, and of course, the Canada Revenue Agency. Please pay close attention to this presentation. We want you to be able to make an informed decision. As you prepare to start your business, this will be one of the most important decisions you face. Do not take it lightly. Before we get into the specific advantages and disadvantages, we'll try to explain the difference between the two options. A proprietorship is the most basic and the most common business structure. In essence, a proprietorship is you. You are the business, even if you choose to use an operating name. In a proprietorship, there is no legal distinction between you and the business. You are the business. You can register an operating name such as ABC Landscaping and use that for advertising, etc. But legally speaking, the business is you. Your business revenue and expenses get reported on your personal income tax return, and you are then taxed on the profits at your personal marginal tax rate. A corporation, on the other hand, is considered a separate legal entity for tax purposes as well as some other critical areas. Your corporation can have a name, such as ABC Landscaping, or it can be a numbered corporation, such as 123456 Ontario Inc. Your business revenue and expenses get reported on a corporate tax return and have no correlation to your personal income tax. Let's now take a look at some of the significant advantages of incorporating your business. There are some significant advantages to being incorporated. For example, a corporation is generally taxed at a lower rate than individuals, which creates the potential to defer tax on the business earnings. If you employ family members in the business or set up family members as shareholders, there is the possibility of splitting income to reduce everyone's overall tax burden. A corporation can carry on in perpetuity, whereas a proprietorship is based upon the life of the business owner. Some further advantages to incorporating include credibility. Financial institutions and others sometimes see corporations as having greater credibility. Lenders too prefer dealing with corporations when looking at financing options. A corporation does not have to use December 31st as their fiscal year end, which sometimes allows for greater tax planning options. Do not jump to conclusions and decide incorporating is your best option. Let's take a look at some of the very significant disadvantages. While incorporating may at first look like a great idea, let's consider some of the disadvantages. First is the initial and recurring costs. It may cost you $2,000 or more to get your corporation set up, registered, and ready for you to do business. Next, you have the ongoing accounting, bookkeeping, and tax preparation costs. Year-end tax filings can cost you several thousands of dollars, whereas a proprietorship costs a lot less. Legal requirements can also add thousands of dollars annually to your operating costs. If you make changes to shareholders, or you make other changes within a corporation, you could trigger significant tax consequences. If you talk to a neighbor or others in business, you have likely heard a couple of common misconceptions. Allow us to explain the truths behind the myths. I will save on income tax if I am incorporated. Saving on income tax is likely the most common myth. A person can save on income tax if they are incorporated, that part is true. But what they don't tell you is the reality. You can only save on income tax if you leave the profits in the business. As soon as you take the money out in the form of wages, you will be taxed at your personal tax rate. Most small business owners need to meet their personal financial obligations and therefore cannot afford to leave the profits in the business. This completely defeats this myth. I can eliminate personal liability if I am incorporated. This is a huge myth. The reality is this. You can eliminate personal liability for some items such as purchases from suppliers, but there are other items you cannot escape. Banks and other lending institutions will make you sign personal guarantees for funds you borrow. The CRA will hold you personally responsible for sales taxes you collect and payroll deductions you withhold from employees. Some landlords will make you sign personal guarantees to lease office space, and a lot of others will want to run personal credit checks. This myth, as they say, is busted. I can write off more expenses if I am incorporated. Not a chance. The rules for claiming are the same no matter what your business structure. The CRA has 2 rules for claiming expenses. Number 1, the expense must be incurred for the purposes of earning income. Number 2, the expenses must be reasonable considering the circumstances. Thank you for taking the time to watch this presentation. If you have further questions, please email us clientcaryledgers.com and we can have a local ledgers representative work with you to make sure you choose a business structure that is suitable for you. You may also want to download our Guide to Business Structures for more detailed information.